The real estate market is shot up to $265,000 since its peak back in March 2022. But is the roller coaster over? Because we are starting to see that prices are starting to level out. So does that mean we're out of the woods? Well, we don't really know because it's really up to what the Bank of Canada does over the next 6 months. Hey guys, it's Jeff, your favorite YouTube realtor here in Brantford. And now in this video, I'm going to go over what happened in the Brantford real estate market in September 2022. You're going to want to stick around to the end where I go over what it means for both buyers and sellers. But before we get into it, if you could do me a favor, hit that like button, subscribe, and hit that notification bell so you can help other people just like you find this video. So we're going to get after it right now. There were 150 homes sold across all of Brantford in the month of September. Now this is down 29% year over year, but is only down slightly from the 153 sales in August. 402 new homes hit the market last month. So that means that we have 3.6 months worth of inventory left at the end of the month. This means that it's going to take 3.6 months to sell the rest of the inventory that's currently on the market. We call this the market absorption rate. The average price for a detached house here in the city of Brantford in September was $718,185. This is just down 2% year over year. The inflation number for last month came in at 7%. Now this is down from the high of 8.2% a couple of months ago and is actually down 0.6% from last month. But let's not get it twisted, 7% is still a high number. Now the Bank of Canada did raise the overnight interest rates again at the beginning of September by another 0.75%. This is putting the mortgage rates around the 5.25%, but the stress test is now gone up to 7%. So they are testing buyers against the higher rate. The Bank of Canada has plans to raise the interest rates 2 more times at least before the end of the year. One is coming later this month and another one in December. There have been talks that these might be the last 2 rate hikes that the Bank of Canada does, but this is unlikely as the inflation rate is still extremely high and they're going to want to do everything they can to bring it back down to the 2 to 3%. Now there have been some people talking that they have to raise the interest rates by another 1.5% in order to actually start making a difference. This means that likely we're going to continue to see the interest rates rise again in 2023 before they start to come back down. Down in the United States, they have increased their mortgage rates to 7%. Now, is this where the Bank of Canada plans to go? No one really knows what they have up their sleeve, but they're going to do everything they can to tame inflation. Now, what this means for buyers is that the Bank of Canada is going to continue to raise the interest rates over the next 6 months. And by doing so, they are effectively making sure that you qualify for less when applying for your mortgage. Now, here's the problem. Because house prices have started to go sideways and level out, it means that you're going to end up paying more money monthly for the same house if you decide to wait longer. With prices leveling off, we can expect to return back to a normal market here in the city. We are at a point where home prices aren't coming down as fast as the interest rate goes up. So this puts us in a little sweet spot where you might be able to find your dream home with less competition. Yes, you will be paying more monthly than you would a couple months ago, but if you wait, you're going to end up spending more monthly on the same house in a couple months. So my advice is that you talk to your mortgage broker if you haven't already and lock in today's rate so you're shielded from any future rate hikes for the next 120 days. There are a ton of homes out there and the chances of you finding your dream home are exponentially higher. And if you do decide to wait the market out, it might end up costing you literally. So what this means for sellers is that as the Bank of Canada continues to raise the overnight interest rates, it's going to continue to have a downward pressure on price, but we're not expecting it to be such a steep correction as before. We expect things to start leveling out. We expect sales to be steady over the next couple months as plenty of buyers have locked in their interest rates over the last couple months, and they're going to be looking to buy before that hold expires. As some buyers' rate holds are starting to expire already, we can probably expect prices to continue to go down a little bit more. If your mortgage is coming up for renewal within the next few months or next year, you might want to think about renewing so that you don't have to worry all too much about the declining market, as it should start to rebound within 3 to 5 years. If you absolutely must sell your home, you're going to want to do it sooner rather than later, because as the Bank of Canada continues to raise their overnight interest rates, it's going to have a continued downward pressure on home sale prices. So the value of homes over the next couple of years isn't going to be like anything that we've seen over the last 2 to 3 years. We're no longer going to see double-digit increases, but we're going to return back to a normal 3 to 5% increase year over year. And this is expected because we were returning back to a normal market. Those gains year over year are unrealistic and cannot be sustained. So one thing that we are noticing is that not every neighborhood is being affected by a decline. We are actually seeing some neighborhoods increase in value more than others, and some neighborhoods are going down faster than others. So you're going to want to make sure that you talk to your real estate agent to find out exactly what's happening in your neighborhood. If you like this video, you're going to want to watch this video right here, where I interview a local rent-to-own company and they explain what this entire concept is all about. So I'll see you in the next video.